getting into a private mortgage it's not the same as getting into an A lending or going to your bank mortgage. Arlen, you said exit strategy, and that's something that we always try to have a lot of clarity on with our clients, because private mortgages, like, this is not a secret, they are more expensive.
Welcome to Real Stories in Real Estate with your host, Denise Laframboise. Real people sharing real stories about their adventures in real estate.
Welcome to Real Stories in Real Estate. I'm your host, Nicolee Evans, and today we have Arlen Ekstein with us, who's going to be sharing about private mortgages, which is a world he moves in a lot. So welcome, Arlen.
Thanks so much, Nicolee. Happy to be here with you.
Oh, I'm so excited to have you here because you work with one of our favorite and preferred partners in the private mortgage space. Can you tell us a little about what you do there at Tembo?
Yeah, absolutely. And thanks for the kind words. We love working with your team too. I work for Tembo Financial. I'm the senior associate here. We're a direct lender, so we don't syndicate any mortgages internally. We have our own balance sheet money. And what really makes us different is, well, among a number of things, but we're very fast and we get very creative with our solutions because we don't have these rigid parameters that we have to stay within. We can look at the situation, understand where the client's trying to go, and really build a solution around where these clients are trying to get to. So we make sure that the solution fits everyone, both us, the client, and the broker as well.
Yeah, and one of the reasons that we enjoy working with you guys so much is that you really are solution-based. Private lending, I find, as a whole, gets a bit of a bad rap. Private lenders are often considered like a bit murky, different connotations within the media. Within, like, I guess even shows and movies and stuff, private lending has this connotation that it's really shady. You're going to get some money, but there's going to be a lot of strings attached. That's not the situation with working with yourselves or working with us for private solutions. And honestly, over time, like, we've had a lot of different opportunities to work with your team to find solutions for clients. Different situations. One that we've seen a lot recently is a lot of clients have purchased investment properties, and especially if they're purchasing from builders. We've found that people were pre-qualified. This is something that they could do, but it was 2 and 3 years ago, and now they're starting to close when in a completely different interest rate environment. So what's some solutions that you have for clients who are looking to close on an investment property that perhaps isn't going to fly with a regular bank? Like, is that something you guys see a lot of?
Yeah, that's a great question. We're seeing a ton of that right now, as I'm sure you are seeing. And for your viewers, I'm sure you can imagine, with interest rates going up and qualification rates through the roof right now, it's impossible for almost anyone to afford anything, let alone a single property, and then taking it even one step further and owning multiple properties. So right now, and for a while, our best friend at Tembo Financial has been the cross collateral.
Yeah, okay. Explain that a bit. What does that mean, cross collateral? Because it's a big word, and it's something that is a really great tool and something you can do. So
yeah, it's a fantastic tool. So it's quite simple, actually. We're able to look at a mortgage not just on one property as a standalone. We can basically do a blanket or cover a mortgage across multiple properties. And the biggest benefit for the homeowner themselves is you get to leverage the equity in one property against another property that you're purchasing. So if you've owned a house for a number of years and built up tons of equity in it, it's essentially free money that's sitting there that you can then leverage onto another property, making purchase financing of another property way easier. That's essentially what it is.
And like for us, what we've seen, and we've done this with you a few times, is we have clients who have put money to the builder, so they've paid all their deposits, and they've the property that they've purchased, now that it's finally closing, the purchase price that they had originally isn't what they could sell it for. Or maybe the situation in life's changed and they're like, you know what? I do not want to actually have an investment property anymore, and I need to close. I don't want to lose my deposit. Like, I've already got skin in the game, but I don't have any more money that's readily available to me. But I do have this asset with my primary residence. How can I do this to close, but then I want to sell it immediately? And just so everyone knows, like, to do that with an institutional lender, like an A lender or a B lender, it doesn't always make sense, even if you can qualify. Sometimes the math to then turn around and sell it right away, you're going to be charged wickedly huge penalties from institutional lenders if you are going to break a mortgage really, really quickly, if that's your goal. So when we're talking with our clients who are in these situations, they're closing pre-build investment purchases, we definitely want to have conversations around what the goals are here. Because sometimes if it is just to close and then sell right away, which is fine, like people can do that, that's totally allowed. Sometimes a private solution like working with Arlen and Tembo is definitely the mathematical way makes sense. Like you see that as well, right, Arlen? Like we math it out, right?
Yeah, absolutely. I mean, the first thing that we ask when working with a broker or a client directly is, where are you trying to go? What's your goal in what you're trying to do? And when we understand their thought process and where they're trying to go, we can build a creative solution depending on just that.
Yeah.
So, with that example that you just mentioned, talking about, someone who bought a property 3 years ago, they used to qualify. Now, paying these mortgages are scaring them because interest rates have gone up a lot. We're seeing that hand over fist right now. We're actually really busy with all these properties. It's interesting how, all these closings are happening when interest rates are super high, but having the exit strategy crystal clear, knowing that the client's going to sell, it's much easier for us to put together a solution, knowing that it's only for the short term, and that we're going to help them close the property so they don't get into any trouble with the builders. And then it allows them to control the sale of the property, because if they need to wait a couple months, we can extend the term of the mortgage so they have a few months to ride it out. For example, wait until the spring market when things tend to pick up. There's a lot of different tools. Prepaid interest if they've got significant equity in their primary residence, so they can close on the property and they don't have to worry about making payments out of pocket to then carry this mortgage for a longer period of time. So asking the question of what are you doing today and where are you trying to go and how are you going to repay this loan is crucial for us from the moment that we speak to a client or to a broker, and understand it clearly so we can design a crystal clear solution for the client that will benefit them in the long run.
And that's another reason that we enjoy working with you is that clarity. Again, with private lending, sometimes there's different pieces that consumers or clients who are entering into these agreements aren't really clear on. And we really enjoy working with Tembo and some of our other private mortgage lenders with that clarity. Like, the getting into a private mortgage it's not the same as getting into an A lending or going to your bank mortgage. Arlen, you said exit strategy, and that's something that we always try to have a lot of clarity on with our clients, because private mortgages, like, this is not a secret, they are more expensive than an institutional lender. But what the difference is, like, they're more expensive, they're a lot quicker. In general, there's often less documentation needed, and it's a solution that you can put in place that gets you to a point to get to another point. Like, generally speaking, we don't put people in private mortgages for extended amounts of time. That exit strategy has to be a real clarity. But you and I were chatting a little bit earlier about some different products that you're putting in place now, especially in the current rate environment, where people have lines of credit that they set up again, a couple of years ago, and they originally had an interest rate, and with a line of credit, it is a variable interest rate, so it's prime plus a factor. And when prime is like small, that's wonderful. But then when prime is at 7.2 right now, and if we're looking at prime plus 0.75, prime plus 0.5, that's an incredibly higher number than what people were generally used to. So you were saying that you have some solutions that could be a bit longer term for clients if they're looking to stay in their homes. This is more like moving off the investment strategy more into like the long midterm, let me say, strategy for people staying in their home if the cash isn't flowing properly. So what have you been doing for clients who, they think maybe it's 1 year, but they may have to stay for a little bit longer?
Yeah, for sure. To your point earlier, private lending, there's absolutely a time and a place. And just like, real estate's an investment vehicle, and, leveraging private lenders has its place 100%, and it's very beneficial for people who know how to leverage them and know how to ask the right questions, and obviously get into a term and a strategy that makes sense for what their objective is with getting into the private mortgage. Like you said, a lot of people, they took on lines of credit, they spent it, and now life is just becoming expensive. Gas is higher than we've seen it in a long time. Food prices are going up, cost of goods. We just, the holidays are just behind us now. I'm sure everyone's got expensive credit card bills with all the new gadgets out right now. So, a tool that, and usually our mortgage terms are anywhere as short as 3 months and typically up to 1 year.
Yeah.
And in the last 6 to 8 months, we get the same thing. We ask the same questions. What's the exit strategy? What's the exit strategy? What's the exit strategy? And a lot of brokers come to us without really crunching the numbers and thinking ahead of, this term is, I'm going to refinance them out after my client's credit goes up, or we're going to refinance them once the Bank of Canada reduces their rates. But the reality is, in this market that we're in today, if you can't refinance your client out to a B bank at the moment, unless something drastic changes, like they get a significant increase in their income, or another person is coming on the deal that has significant income to help the ratios
something
out.
That's guaranteed, because like, I don't know about you, but my crystal ball's broken on when the Bank of Canada is going to do these things. And like, we can all cross our fingers as much as possible, but doing something like a private mortgage with an exit strategy that's contingent on so many external factors, like all aligning exactly right, that's not really an exit strategy. That's more of a hope and a prayer at that point in a time. And like, that's not a solid exit strategy.
No, absolutely. And you're very familiar with the solution that we've designed for clients right now, because we've helped your client out in this exact situation. Is we're able to, the way that we register is super unique right now, especially for clients who have and want different things. The first important thing is that they've got equity in their house.
Yes.
The second thing is that they want prepayment, so they don't actually have to make payments out of pocket. We collect the interest payments up front and then create a safety net, or a bank account, if you will, to pay their monthly payment on their behalf.
Yeah.
It helps people with cash flow, gives them peace of mind, and know that they're safe for the term of the mortgage when we're doing prepaid interest. So the problem now is the exit strategy isn't always clear. So the way that we're registering right now in a lot of cases is very unique, where we're creating a buffer for clients where the exit strategy isn't clear. In year one, we're able to give them that prepaid interest. And then in a year from now, when we give you a call and we say, hey, Nicolee, what's the deal with so-and-so client? And you're going to say, hey, Arlen, I've gone to every single B lender. I'm getting declines left and right because their credit score hasn't risen as much as we thought it was going to be.
Yes.
They don't meet the qualification rates for the amount that we're trying to get approved for. We need another year. We just need to wait this out. What can you do for me? And because the way that we're registering is so creative and unique, we're able to capitalize the fees on the renewal, meaning that the client doesn't have to pay out of pocket for the renewal. We kind of add it and increase the loan amount
At the front
slightly.
end, you're front ending everything, which I think is really smart because right now we are seeing so many people like things haven't moved as quickly as we'd like to. Like we've seen really high interest rate environments that have maintained. It's not
Yep.
like we had an up and then we're having a down again. It's coming down slowly. But to your point, perhaps it hasn't come down fast enough. And for us, when we're working with our clients, we always want to make sure that they're taken care of now and in the future. So that's one of the reasons that we like working with your team is because we know that you will be treated with respect and kindness at all points rather than told to take a hike. The prepayment idea is also fantastic. We've used this solution oftentimes for people who perhaps are in a situation where the home that they're in, they don't foresee staying there for forever. This is like maybe they're retired, maybe they're retiring, maybe they've had some life situations where this is no longer going to be where they are. But the big changes that are coming are they are going to go back to work or they are planning on selling the property, but it just gives some breathing room and really gives that ownership back to our clients so that they're in control again. So often in this market, everyone feels that everything's out of control. And it is like we don't control prices of anything. Like you've talked about how expensive life is right now. And people feel that they don't have control of their situation. The solutions that we can find with a private lender are individual, they're unique, and they really do give that ownership back to our clients. So that really is what we enjoy about working with your team. So,
Thanks so much.
Arlen, you're not going to believe this, but we're at time already.
Wow.
So can you just tell us how we can find you and Tembo?
Yeah,
Talk to us.
absolutely. You can visit our website, www.tembofinancial.com. You can email us directly at info@tembofinancial.com.
Mhm.
Or, we love chatting with people. So give us a call, 416-238-6717. And
Awesome.
anyone that picks up the phone is going to treat you like gold with a big smile on our face.
Exactly. And that's why we love working with you, Arlen. So thank you so much for
Thanks so
being here
much, Nicolee.
today. And thank you for tuning into Real Stories in Real Estate podcast. You can check out this and other episodes on our website, laframboisemortgage.ca, or anywhere you consume your podcasts like Spotify, Apple, or iHeartRadio. Thank you for checking us out today.